morning, friends. It's Thursday, December 8th. It's just prior to the market open. I hope you have a great day. Hi, I'm Marv Eisen of Timeless Dollar Trading Academy. And I start the day, today as I do every day, looking at the economic calendar to see if there are going to be any announcements that are going to skew the market. And today, there was just one pre-market initial jobless claims that came out just about where they were forecast. So that's not going to move the market at all. Usually doesn't. But let's move on then to the morning news. Now, the morning news, Brittney Griner, by the way, was just released by Russia in a prisoner exchange. Congratulations. Thank goodness for that. The morning news, futures rise as investors assess risk of economic downturn. And so, and there's another article over here. Headline rather, Justice Department tells bankers to confess their misdeeds to cut better enforcement deals. Friends, I don't know about you, but ever since the real estate meltdown, not one banker was put in jail for their misdeeds. So I guess the rule is he who steals the most gets to keep it. I don't know. That's just me, but maybe I'm wrong. At any rate, moving over to the cause of the economic uncertainty, well, here is a chart of the one-day candle of the S&P, not the E-mini, the S&P. And this black line, this is the resistance to the upward movement that began back in January. This is for the entire year. If you carry this line back up to the beginning of 2022, this line still held. Prices never broke through this line. And they did just briefly on the 1st of December, and it looked like they were going to start putting in a nice December rise, but it wasn't to be because Fed Chairman Powell came out, made a statement based on a jobs report that the Fed might not reduce their rate increases, which have been 3/4 of a point for the past 4 increase cycles. So when he said that, that's all the market had to hear, causing concern that the increased rates were going to start a recession. We've been down substantially, although yesterday, Wednesday, you see this doji that formed here. Prices basically halted their downward movement. So that's the big picture, okay? So we're right down at the bottom of this consolidation or sideways movement actually that started it's about for a month now. So that's the big picture. Now moving over to today, here is my trading zone for today, and I'm showing it to all of you. I make this available by subscription. I usually don't show it. I use this together with my line that I put in denoting where the market closed the previous day, right here. Market closed on Wednesday at 39.36. And of course, I am a believer in stochastics. I use the stochastics as the only indicator on my chart other than the trading zone and the previous day's close. So GST TMC, for those of you who've taken my course, these are the 6 trades that you need to know if you're going to be a day trader. And there are only 6 trades. I don't care how many hundreds of videos that you watch trading. These are the 6 trades that the market always displays, and these are the 6 trade setups that you need to know. And it stands for gap, support and resistance, time and price, trend, momentum, and candlestick. Those are the 6 trade setups. And if you want to know how to play them, how to trade them, how to recognize them, take my course at timelessdollar.com. So where are we today? It's just about a half an hour prior to the market open, just after 9 a.m. Eastern. And my trading zone is a bit lower than the market, where the market is trading now. And if the market continues up and opens up here, we have a possibility for a gap trade to the downside. Prices may recover somewhat over some of the ground that they've lost the past few days, but then we have to be very careful. Remember, those of you who know these 6 trade setups, play your trade setups, okay? The market is probably not going to trend, although looking at the big picture, here we are at the bottom of where this sideways movement has been for the past month. And as you can see, prices did want to jump up. You see this long candle. This is the longest candle. This is the longest candle that the S&P put in the entire year. So prices actually did want to begin their December rise, but Chairman Powell put a damper on that. Is it going to be temporary? We will see. There is going to be another announcement, a news conference actually, by Chairman Powell in a few days. So we'll see what he says, and prices will react accordingly. So that's my video for today. Thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.